So we discussed some past paper questions, and then so we will continue with that. Hope you can see the screen. Shashi, can you see the screen?
Yes, sir.
Okay, right. So until others join, so I will just brief the things, the summary that we discussed last week. So basically, we have completed 4 sessions. That is introduction to the credit to introduction to the development financing. And number 2 is like SME banking. Number 3, sources of financing. Number 4, microfinancing. So once we are trying to do this, we come across several key areas for exam. And last week actually I have shared with on the board like what are the models that you need to memorize before attempting past paper questions. But again, since that I have done the same thing for last week for the revision development financing revision, I thought to share those slides with you, 1 or 2 slides, so that it could be important if you forgot to mention or write it down. So just go ahead and write it down if you want further. So first one was the lending methodologies. So there are means type categories of lending. There are a couple of lending methodologies, like first one could be asset based or collateral based. The second one could be cash flow based. Third one could be fee based. Last one could be project based. So as I told you last time, it is good that if we can say what are the advantages, disadvantages of each, in case that if we are asked to write a short note, or else we need to have some examples set for, let's say, what are the asset based lending, what are the cash flow based lending, like 1 or 2 examples to suit each of these categories. So in that case, so it is easy for us to write a kind of a fair answer and get maximum marks. So that's the first model that I want to share with you, lending methodologies. Then we move to the second one. So that is product description. So sometimes that we are asked to write a short note on products. So whenever it is given, so you sometimes the examiner would give us write a short note on what are the the stakeholders of the particular product, and also that what are the requirement, right, where that we are going to use. Like that, if the examiner specifically gives us what to write, then we don't have an issue. If he has not, then it's up to us to describe the particular credit in order to get the maximum marks. So by doing so, this is the kind of the kind of what you call structure that I can share with you. Maybe the product name, let's say overdraft, factoring, term loan, hire purchase, whatever. Under the features, so you can have maybe 2 say points, right? So here the features you can segregated 1 to definition and the features as well. So in the definition is something about if so OD, what is overdraft? Right, overdraft is like a type of instrument which we provided to customer for their working capital support. So then features could be, say, it's annually renewable and it's a on-demand product. So there is customer can service at whatever point of time without any payment charges. The customer being charged at the outstanding for the given time. So like that, there may be so many features also attached that. So if you can write 2 separate points, like what are the definition, what is the definition, and what are the features, so then you can get 2 marks for that 2 points. Third point could be what are the advantages of disadvantages in the overdraft or whatever the product. So some products you may have advantages, this and some you may not be able to. But if you have advantages or disadvantages, it could be towards the customer, it could be towards the bank, whatever, right? So then write another line. The fourth one could be risk and mitigant. So some products we might have some risk while operating. Some may have mitigates also, like if OD, what could be the like risk? It could be like we don't have any idea how to track the end use, right? Because we can't track the end use. So it means that there is a kind of the credit risk where the customer could use it for any purpose, and in another way that we are not in a position to track it. So that could be a risk that we can find when offer in a overdraft. And in the other terms, like what could be the mitigate? The controlling point could be, so we might have sinking fund, we might have security, we might have fluctuating turnover through account, we might ask the customers to deposit post-dated checks uh, wherever possible. So like that, you have some mitigates also. The last point could be illustration, example. What type of OD, maybe overdraft, like POD, TOD, casual OD, like that. Or might you have like maybe the where you are going to use the kind of OD in practical example, like let's say if a small boutique shop that we provide overdraft to finance their day-to-day expenses like overhead expenses. It's a kind of example. So like that, so you can have 5 different points when you are describing the particular product. So that's very important. As I told you on the other day, so it could be very important if you can write different points so that you can maximum marks there. So this is the second model. Actually, last week also we discussed, just for a better understanding that I am sharing again. Third one, I think SME, that is also we discussed. This is what you need to know. You need to know what is the definition, why SMEs are important, what are the products available for SME type of customers in banking field, what are the sources of funding. It could be internal, external, long term, short term. I think we have learned those things. What are the support services for SME sector, right? So we discuss about organizations, foreign organizations, local organizations, and also the supporting tools like credit guarantee, aid, and refinancing line. So we learn everything. Then issues faced by the SME. So the issues, problems, or challenges faced by the SME, it could be due to customer itself, it could be due to bank, it could be due to other organizations. Like we need to know what are those things separately, because there are some questions could be asked. So then what are the solutions, remedies we can provide for those challenges? Maybe the customer can also provide a kind of solution, banks also can, and the other organizations also can do it. Like let's say other organizations example, if we don't have a say recovery support act or rehabilitation act in Sri Lanka, we don't have it. We have recovery like parate and debt recovery, money recovery actions are there to get something out from the customer, but we don't have something from the customer's perspective. Rehabilitation act or restructure, there is no support in that sense. So if that is it's in absence of that, could be a challenge issue faced by the customers. But for the solution could be government or department of SME or even ministry could come up and introduce something like microfinancing act, could be come up with SME act like, right? So it could be support for the players in the market like. So those are some issues and the remedies, right? Then finally, information requirement. Let's say customer comes to meet you, and if he wants a kind of a credit facility, then we might have to offer kind of facility. We have to support the customer request. So how we are going to do that? For that, you need to get some information from the customer itself, like their business incorporation, NIC, business plan, financial information, marketing plan, management hierarchy, employer information. So everything you can get from the customer. And bank also provide so like what type of sector, subsector, business activity performance, and if the customer is existing customer to you, and what are the repayment pattern, servicing, those things. And finally, from the environment that you can think about, what are the the government directives, international what do you call changes, customer taste and preferences, competition, right? Or maybe other environmental related acts. So those things we can get from the environment. So based on all that, so you do kind of proper evaluation on the customer's credit request. So that is all about SME. So which again I am telling, we have discussed last time on the board, but for the better understanding, so I have done the slide so that it's been shared. That I mind you that I have not shared through this Google link, maybe the classroom. So I'll do that over a course of period. So we will share that also to your personal emails, like what the IBSL normally does. Last one, the microfinancing again. So we discussed in detail, and the presentation and tunes has been shared. Again, these are the areas that you need to know. What is the definition of microfinancing? what are the objectives of microfinancing? What is the target market or audience, right? So where basically you are targeting the microfinancing. Then you have to know about what are the essential elements in microfinancing delivery, right? About teaming, empowerment, and savings, and those things actually we learn. So you need to know by heart. Microfinancing model. There are several models available for the microfinancing. We learned 4 in our class, and there are many other in number. When you see the past papers, you can find so many things. Then what are the concerns or challenges, issues faced by this microfinancing entrepreneurs or enterprises? Similarly, whatever the providing organizations like bank, NGOs and all that. So both parties has to face some issues. You need to know what are those. And again, issues like concerns and like SME, better that you can have some remedies. How we are going to overcome those challenges? How we are going to overcome these problems? Like, going to the smart technology and maybe having microfinancing act, enhancing the financial literacy like that. So, I mean, changing the bank's risk appetite kind of thing are some solution towards this microfinancing, sector. So like that. So when you say concerns, problems, challenges, you need to also come up with what are the support or the remedies that you can provide. Then institutions, like what are the institutions engaged in this microfinancing delivery, microfinancing proposition? There are so many, like banks to NGO to non-banking financial institutions, money lenders to corporate or societies. Are so many. So you need to know by name and if required with some examples. Then microfinancing act, right? And what is the act when it is passed? What are the key functions and what are the the requirements on the microfinancing act? So there are a couple of things in my presentation and tute also I have given it, but you need to know by hand because we have seen in some occasions the examiner has specifically asked. So what are the microfinancing act details, functions, and everything. Last on the list, basically imports to the economy. So like SME, microfinancing proposition, microfinancing delivery, microfinancing discipline is very important to economy like Sri Lanka, like maybe developing country also. So why? What are the the support? What are the contribution from microfinancing sector? So there may be some questions to that end as well. So there are 8 circles I have given here. So you need to know whatever maximum information with relation to these 8 areas. In addition, sometimes you can find 1 or 2 when you go into the my tute and maybe the past papers, but you can enlarge this further, but keep on working. So basically when you done with these 4 modules, you are in a position to at least answer maybe 2 to 2.5 questions in every past paper. And maybe there may be some MCQs also, like 1 or 2 MCQs in a given attempt. So then you mean to say that I very limited time, actually we could have scored something about 25 to 30 marks. I mean, very easy. I mean, it's just 2.5 or 3 questions. Like, I mean, in worst case scenario, right? I mean, if you take 10 marks out of 20, it's something 30, right? 25 to 30, right? So I mean to say that, very easy to score because even we are at very primitive stage. Only 1 month might have 1.5 mark just passed. So we have done 4 areas. And so you can, get so many information and you can score good marks there, right? So just because I have shared this, because as I was telling, because I have used this for development financing division, so thought this is again important to you, so that's why I shared it again, just to right. Before further proceed, any questions on these particular areas? We have, rest of has been also joined. A very good morning to others also who joined late. And actually I have just shared the kind of the materials I did with my development financing division prior to move to the microfinance. So whatever the today's question session. So any questions that you encounter on these 4 or 5 slides? Oh, everything is fine. Okay, seems okay. Dilanja Hansani, Malakan Oshani. So hope you're okay, right? Fine. Okay. So then let's move to the past papers where we stopped at first one. I think we have done it, and we'll move to the second question. Yeah, second question is basically it's all about it gives a kind of a description on project lending, its viability of each product, and lend in some sector is essential for developing country. Many developing countries mandated lending schemes are implemented to encourage lending activities to such sectors, though such schemes have inherent disadvantages. Similar scheme also implemented for banks in Sri Lanka by imposing minimum sector exposure limits on their credit portfolios. Right? Then it is something like we just discussed about what is the importance of SME to national economy or economic growth, development of economy, and microfinancing similar. Maybe development financing or the project financing also has the same the impact on this development of economy. So that's what they are. So that's what I'm telling. Sometimes it's like you can easily score those things, but only thing is we need to be ready before going the exam. What are those type of the contributions like? So just going before the answer. So what do you think? What is basically project lending is? Now we know it's something that investment, it's like the contribution, it may be the support towards bigger projects in an economy. It's maybe infrastructure project, industrial projects like. So generally when you are doing, what do you expect? Obviously employment generation is one. Number two could be it could support to export. Now last week you might have seen the South Asia biggest tire factory being declared open. So 70 to 80% of that production is going to export to foreign countries. So see kind of impact that the particular organization can do Sri Lankan economy. It could be from raw material, from rubber purchasing to sourcing from their end to, and is end up with export income which could support to foreign exchange reserves like. So see that the impact, it is like a project basically. This is a project that we have to speak about. There may be the equity could have been come from the owner and the rest could be bank loans. Right, so that is a kind of a bigger project. Maybe the overall project is like 250 million US dollars. So far that 125 million has been invested. With the second phase, that it goes to 250 million dollars. So it's a big, huge investment. So when you say the huge investment, the impact is maybe the employment, maybe the raw material value addition, maybe the foreign exchange savings, maybe the export drive. Right, so many things we can think about. So like that, so try to put down what are those things. So think about like if you are it doesn't come across like what are the like impacts. So think about the bigger projects. Could be a harbor, could be a highway, could be like this like bigger factory like tire. So then think what exactly, because if when you are having those type of project, so what you are going to do, so you might have to bring down some foreign technology here. So they were telling that the technology is being used from the European technology, but our people are working on that. So what do you expect over a period of time? So Sri Lankans now could do well on this technology and after sales service also. So it's another maybe technical expertise also being brought down here that could have a support to connected projects, connected economy. So those are the things that you need to think, and what kind of the contribution done by this project lending, because as a bank we might have lent it and outcome is like enormous and it has impact on several areas, starting from employment to foreign exchange to balance of payment to so many things, right? So having said that, so see what the examiner has suggested is a method of funding in which the lender looks primarily to the revenue or cash flow generated by the single project as a source of repayment and project asset. So write an interest as security or collateral for the exposure. That's what even our definition of the project lending is similar to that, right? Transaction play an important role in developing the economy as it is usually financing large, complex, expensive installation that might include for power plants, chemical, mines, transportation, infrastructure, blah blah. That's so. But as per your thinking, is this answer is adequate, or has it covered everything we need to write here? If you are an examiner, would you give full marks to that question? Answer. Dilanji, what do you think? Ansani, Malaka, Oshani. Are you happy with the answer? Let's say if you are a marking examiner, so you are supposed to give marks to that question. Has the answer adequately covered the question? Speak up, please. Dilanja, what do you think? Malaka, has it covered enough? Oshani, what do you think? Means you are silent in the sense, what do you think? Dilanja, what do you think? Hope you can hear me, right, Malaka? Oshani, can you hear me? So all are silent means some issue or like can you hear me first place? Malaka? Okay. So I thought that since everybody is silent, so I can't, reach you. But Oshani, what do you think? Whether that, yeah, Dilanja, correct. We have to elaborate more. But it's Oshani, what do you think? Has it adequately touched? Because the examiner wanted us to, what's a like contribution, right? So the examiner suggested answers basically tells about, yes, he is defining and also further defining, right? What do you think? I think we need to add one or two points, right? Because now since that when project financing, so project lending, so we talk about outcomes. Outcomes is like maybe it's support to the national economy, so economic growth. So in that sense, so we can say about employment creation, say foreign exchange saving, impact to the balance of payment, and maybe when you are like doing that transfer of the technology I just mentioned, so you need to mention those things as well, right? So so by doing so, only that, like first two lines actually is fine, that's he defining, and basically he also mentions about application of the particular like examples of like project financing, that's also fine, but try to add some more points here again, because then now those are some suggested answers. Probably now when you are in a marking examiner situation, we will see what the contribution where the project financing could bring to, like when you say SME, we discussed a lot of things about employment creation to managing inflation to about raw material, I mean value addition of the raw material, like maybe regional development, like so many things we have discussed there. Even microfinancing also similar, project financing also similar, but in case if you have difficulty, think about a bigger project, what exactly they are going to do, like we just discussed about the tire factory, right? So then you can you know that there are so many like support the particular organization can do. Then write down 2-3 points, because answer is okay, but it's not adequate. But when you are going to write the same thing, obviously you might not get, because now the suggested answer said that, but the coverage of the question is not enough. Hope that you have understand that you need some more. Are you clear on that? Now you can think about some more points and write. Ansani, Malaka, Dilanjan, are you clear enough? Oshani, you can write 1 or 2 points other than what the suggested answer mentioned. Thanks, Dilanjan. Right. Hope rest is okay. Like, so basically, think always what suggestion. Yeah, that's a good base. Thanks, Oshani. And then see what are the things additionally you can add, because now anytime that he can ask the same question. Now he might ask about project financing, SME, microfinancing. All three important perspective, even under the development financing subject. So anytime he can ask what is the contribution, what is the support, right? That each of these, whatever arm can do. Fine. So then we'll see the second part. Explain in brief role of lending or credit in economy, and it's more important to the financial. So that is again a general. So that basically it talks about all credit function. Say lending. So that is like umbrella. So under that lending also we have only SME lending, micro lending, project lending. You getting my point? So here now he goes in the second question. He goes and beyond the particular item. It is like total lending, total credit to economy. So like basically, before answering that, it's something like this. Let's say now you want to start something. How you are going to do that is, so you say you are right now being working attached to some organization. So after that you have saved something, and then you are trying to start a say small enterprise, or I mean business. Maybe let's say if you're a girl, you might start with something about cake or whatever those things, or maybe if you are a girl and boy, you together you do kind of interior decorations kind of something. If you're a boy, you might start with side maybe like web page designing and so on. So lot of things that we can think about some entrepreneurially. So we will say start, and then yes, you have some money, so you have invested. Now you want to go to the next level. Say now you want to go for the bigger orders, bigger institutional customers like that. So then you want some money. So how can you find that? So then you think about the sources of financing that we discussed under session 2. So then you think about whom I can get money, bank, my relatives, my friends, like that. So you think about the other. Why? Because you get that money and you invest on that, and based on that, you will expand your business. That's how you generally do. So credit is in the bigger picture similar. In the economy, right? So you can, what do you call, enlarge to some extent by its own. So beyond that may not be possible. So that's why even like, so I mean, we can see so many protests going on about, privatizing this and, going to the joint venture of this and all that. So now, if you are in a government seat, probably you also thinking about the same line, because we don't have adequate capital, adequate credit. Maybe government cannot pump so much of money for the investment due to various reasons. I mean, not, I'm blaming to whatever the government to government, but you need money. So then you need some credit support. You need some financial support. So with that only, you can enlarge that the business. Like you have a small piece of cake. If you want to make it large, then you need to do something to that to make it large. So that could be the credit we are talking about. Your own business also. Right now you have come to say 2 million turnover a month, but if you can credit something, some support, now you go to 2 to 5 million. That will enlarge the top line and then middle and the bottom line. Similar in terms of economy also, this credit has the same impact, right? So that's what basically is like, asking a writer short note. We'll go with the answer. Important part of the economy. It describes as a transaction between a lender and borrower, in which borrower promises to pay back the money in the future, loan with the interest. That's what basically the credit is. Underlying definition of the particular credit, right? So somebody called borrower, somebody called lender. So there may be agreement. With that agreement, so you will, pay them after a particular period of time, and that's what basically are happening. So then number two, credit leads to an increase in spending, thereby increasing income levels in the economy. This in turn leads to higher GDP and thereby faster productivity growth. If credit is used to purchase productive resources, it helps economic growth and adds to income. So credit further leads to the creation of debt cycles. So that's what I am telling. So basically, now GDP is, we know, consumption, investment, and savings, like in mainly. So C plus I plus S. So then if you can, let's say, introduce some credit, what happened? It could increase the consumption. Disposable income can increase. So that's what we expected, or we experienced recent past during the COVID-19. What they have done is like they have sometimes reduced interest rates on some instruments, or they have stopped, like they have given some moratoriums on repayment of loan. So what happened? Then there is a cash flow excess, individual to organization to now society. So when you have that, what you are going to do? So you will invest. So you will consume something. So by that, so again, the C is going up, S is going up, and I is going up. So by doing so, there is a GDP is going to increase, right? But effectively, you need to use the credit. So in that, what happens is when you are going to do that, like in your small business, so you get the credit, you invest it, you make turnover, and again you have some retained earnings, and then you reinvest that. So with the 2 million credit line, you do a 4, 6, 8 times business within that. Why? With the value addition, so you can do all those things, right? You take 2 million and you are not going to take it out another 2 million. No, input of the 2 million, so will have multiple impact within your business. You will do that because you will add your value, your marketing, and your customer pricing and kind of thing. You can do that. But without that 2 million, you are unable to make it that 8 million. Similar the economy. So that's what we have done recent past. So because it has resulted to some extent, some economies, some industries flourishes. Yet to some areas, yes, we need to do, but some industries, it happened. So that's what the central bank also done to support the credit. The credit support could be, given in different ways. One thing is you can do a credit infusion, additional, or you can save cash flows, like, so where again existing credit flow, you will try to manage it. That's what we did. Plus that we have given some additional credits, like some what do you call additional credit lines about some investment purposes and working capital purposes. We have given some credit lines, credit support during this pandemic. So again, that the understanding was basically when you are giving, so you can do these things. Third, banks and financial institutions are majorly impacted by credit growth in an economy. This is because their primary business is to provide loans to customers in return for interest payments. As an economic environment improves and customers are more willing to spend, demand for credit growth. So that is basically, we talk about this credit growth. Time to time, maybe central bank or the authorities might say, you curtail the credit growth, increase the credit growth, because there you need to cover some liquidity and all the other sort of support, control that. And if not, because the credit growth basically support consumption, savings, investment in the bigger GDP equation. This is advantages for banks as it leads to more loans being provided and an increase of interest income. Because if you say the credit support, basically in a bank's perspective, you get more. In a society and economic perspective also, it grows. So basically, this is how the credit can impact on the economy. So again, further what you can write here is like what we have learned earlier, because it support economic growth by way of how, like some businesses like export and some businesses could be supported. And again, you can say import substitution sort of business can be supported, and by doing so, again, you can save, you can manage the balance of payment. In other, by doing the credit provision of credit, not only like Western promise, like outside the Western promise and all that, so you can develop. Now you can expect the regional development also. That's another plus point. And uh, also we know that we have like employment issue. I mean, we have unemployment issue that also can be addressed. How? When you give credit enterprises, so they are trying to enlarge. They are going to grow their businesses. By doing so, they can provide more and more employment opportunities like that. So I mean, whatever, it could be SME, it could be micro, it could be project lending. In overall credit also, the similar type of expectations can happen. So I mean, wherever it comes, you can write the same thing in the first part, and the second part also, like employment generation is also correct under the credit support, right? I think it adequate for you to make a kind of an answer. Any questions on that? Any issues, any areas or any feedback? Okay, you are fine with that. Please let me know if anything, that if you are not comfortable, and if you want a further input, please let me know, because I just wanted to highlight this, like yes, there are suggested answers, but try to go through it and add some more value on that, because otherwise what happens is, because whenever you are going to exam, because students go through all those papers and they are ready with additional points. So in that sense, so we need to be competitive in the exam session as well. Since these things are very like straightforward, you can do those whatever the past papers, and you can be ready whatever the question for the future, like now imports of SME, imports of microfinancing, imports of project financing, and imports of lending, that basically they have asked it. This is a very general question, because anytime you can answer. Third one, what is meant by mandated lending and its major objectives? Any thoughts on this? What do you mean by the mandated lending? What do you understand? Mandated lending. And first place, let's say, do you think this is good or do you think bad? What is your thought? It is like something good for economy, good for a country, or it has some negative points as well? Because here that answer is there, so it's not a big issue that you can read through, but I want to make a kind of discussion, because I mean, sometimes there may be a question related to that in next session. Even like last week also we discussed about moratorium, right? And there may be some questions could be related to moratorium in the present like next month exam. So that I just wanted to make a kind of a discussion. So mandated lending, how do you see it? Is it a necessary? Is it some advantages? So is it have some disadvantages? Good for economy for equal distribution of funds. Dilanje has that point. What the others think? Malaka, Hansini, Oshani, what do you think? Say mandated lending. Maybe example I can give, like central bank asking us to give 10% of our portfolio to agree. It's like mandated lending that they have implemented us on banks, and so we are working on that. So sometime back, actually the previous, not the 2015 to 2020 government, I mean previous, so we have seen some mandated on SME sector, mandated on export sector, mandated on women entrepreneurs. So they as per the budget they introduced, but it could not be implemented. So that's how basically the mandated lending. So Dilanj has come up with a very valid point. What do you others think? You also need to contribute here. So then only make it like active discussion. Malak, what do you think? Whether it's good or it's bad? If it is good, why? And if it's bad, why? Development and macro strategy sense it's good, but allocating scarce resource, yes, very good answers. Resources, it may not be productive. Yes, very good. Oshini, what do you think? Hansini, what do you think? Suggest what you think, and then we can, collectively discuss. Because these things, anyway, it's good that because whenever next question comes, yes, obviously you have come up with two answers, right? One is for yes, one is for no. Because sometimes next question could be, so critically evaluate, critically analyze mandated lending by central bank. That is the question that you are getting for June paper. So you need to have answers developed here. So anything from Oshini and Hansini? Any idea, or shall we continue with what Dilanj and Malaka mentioned? Right. So you also can contribute while we are discussing. Basically, yes, very good 2 points. Now, first, the mandated lending is something where, depending on the economy and depending on the government requirement, so that the government anytime can come and say mandated lending, mandatory lending, right? So the plus side is basically because they might do it. Why? Because as there are in some sectors in economy needing some additional support, because by doing so, the government and the authorities expects, so it has, it could contribute in a bigger way to the national economy. Like if you say agri, why that government wanted banks to fund agri? Because Sri Lanka basically is agri dominated sort of economy. Right now we are trying to do value addition to industry and all that, but whatever said and done, I mean, Sri Lanka can do a lot on agri, right? We have not utilized maximum potential on agri sector. So then the government wanted banks to do a dedicated lending on those areas, but only thing is that banks should know how effective it should be, right? Rather than when the government says that we can't go and dump our money, and then if the things are not coming our way, so NPL, provisioning, impairment, and all that there, so it's your baby then. So then the plus point is like maybe the banks or the financial institutions may not move to those areas because they think it's not viable, feasible, they're not getting adequate return. So those are things. But in Dilanja's point, yes, good for economy, for equal distribution of funds. Equal distribution of funds or equal distribution of, say, whatever benefits, right? Utilities, yes, that is fine. So, yes, we need to do something. We need to do some at some level. We need to, otherwise, then everybody, like if say banks, so we prefer to be in Colombo. We prefer to be to grant loans to corporate where you don't get any NPLs kind of thing. But we never reach to the branches, regions, and needy areas and needy sectors. So to avoid that, yes, you can do at whatever mandated lending. The flip side is, as Malaka suggested, but when you are trying to do that, because in order to do justice, so whatever we go and dump the money there, and then we have some issues in recovery. But what happened here is, now whose money? Like, so we are getting good money from our, I mean, depositors in like Western province or so, and then we go and do it in somewhere else. But in terms of shareholders' perspective, profitability perspective, it may not be productive, right? So there's a flip side and a good side as well. So it's up to you to make this balance. That on top of that, government is asking to do those mandated lending. Right now only agree, but it was on the cards to do mandated lending on SME, women, exports like that. So basically, there the government vision is objective is to kickstart these sectors, and by doing so, you can make the economy, enlarge, flourish. And yes, you can do it. Like now, but ideally, what the argument is like, you can't do it mandated. Continuously, right? To some extent, yes, because this is like open economy and it's governed by demand and supply and all that. So then, what the banks and financial institutions and even the entrepreneurs together, what we have to do is like, yeah, we do a mandated lending, agree. Then think about agree what are the value addition type of thing rather than you always, let's say, giving money to like paddy and then you get the harvest and you are consuming rice. So that is the same cycle we have been talking about. No, not that. So think about beyond, like rice, several categories. Even when you are giving loans to farming, we think about the seeds which have more like you can get higher harvesting, but you invest on that. You do R&D on that. Maybe bank or the other organization can come together and do all those things. That's also agreed. Right? This is agri sector. But when the uniformity, the consistency of the seeds, then you don't have an issue in the output. Right? You can get a bigger output. And part you can consume, part you can export and get the money like that. So then collectively we grow. So that should be the aim like that. Because try to self-sufficient. Like when you say like it's like Samurdhi or Janasavya kind of thing. So you give, and so you never know. That doesn't work. That's what the Malaka was telling. But somewhere, sometime, yes, you need to do it. Then it's everybody's responsibility. Bank, government, entrepreneur. We need to think about how best we can use that money. Like in the credit, we talk about 2 million, we try to do 6 million, 8 million. So with the 2 million, can we do it to 12 million? We can do, because we are working on the supply chain. Right? In banks also, when you say mandated lending on agri, rather than you give money to the cultivation, think about milling, storing, exporting, other services. Like you can do so many things in the agri supply chain. And you have to encourage entrepreneurs to work on those things. Yeah, somebody will work on that, but there are some other aspects in the segment also. So government can say, but it's our responsibility to find out a better the opportunities in the agri sector. So that's what we can do. We can't say this is wrong, it's not doable, we are not agri. No, we can't do that. Right? Only thing is we have to do it and effectively and efficiently. So that's what basically we can say the for and against. Like sometimes, as I was telling, there may be questions for you, like critically evaluate mandated lending. So what do you think about this? Recent moratorium granted on banking sector. That could be a question. So it could be some pluses, some minuses. What are the pluses? Because given, yes, reduction of interest rate, reduction of waiving of some fee, deferring of some capital, and also giving additional loans at low interest rates to support the working capital. Those are what the inbuilt items in the moratorium. And then think about what are the pluses, why we support this, and also think what are the negatives. There are two things, because now we have to do, because we need to grow, everybody in trouble. That's what you do kickstart the economy, so you give concessions. So that's what, like here, mandated lending, the moratorium is now it's mandatory. Now let's say if you take tourism sector, from the Pasco incident from 2019 up to now, not a single capital being paid by some of the tourist hotels. Now think about now next September they are talking about almost 2.5 years or so. So what could be the impact? Then they have taken money. Whose money? Some good depositors. Now they have invested. They have realized some money out of that. Since they don't have any business, they can't repay. Now they are cascading impact. Interest is going up, interest is accumulating, right? A lot of things are happening on that. But we never know what their attitude is. They might have dropped the business. They are not going to continue with like, right? So they don't. I mean, they might think about why should we pay like that, right? So I mean, so many behavioral, I mean, social impacts also could be expected in time to come. These are the negative side. And again, we call whose money again. This is like good money from the depositors, but we have to pay depositors, and we use that money to give concessions, right? Then because it's a mandated, right? Moratorium concessions are again mandated. So next question in a time to come could be moratorium related. So they might ask us, critically evaluate the moratorium concession or moratorium proposition, whether it's, impact bad to the customer, bad to the organizations like banks, and what are the advantages like that. So you need to, think bit like here. Yes, right? You have to come up with that type of, answers. Like I just like, sharing those things because sometimes when you go to the next paper supposed to be held in June, so probably these things could be on the offer. Right now, here we have like more general question. It could be combination of all those things. Right. Right. We just read through. Central Bank of a country declares a minimum percentage contribution of different sectors that the loan book for bank should consist of. This minimum requirement is identified as a mandatory lending. That's what they agree like. To increase the participation of lending organizations in the area, sectors of the government consent. So basically, this is like, as we said, it could be agri, it could be export, it could be women, right? Entrepreneurship. To have a good mix in the lending portfolio, it's a diversification technique also. That's also just possible because right now, maybe diversification in terms of region, products, sectors, customers. So everything is now possible here, right? If not, what happens is, so we might have focus on, say, like HSBC, Citibank, like that. So we have standard chart. So we focus maybe a smaller area. So we are happy with that, right? But in doing this mandatory lending, what you have to do is, you can't do Agri Colombo. You have to go to Kadurwali, you have to go to Kalpiti, you have to go to maybe Deniai like that, right? When you are going to do that, maybe regional persons also there. And there may be regional developments also happening. Employment creations also could be taken place. I mean, so many things can be expected, right? Mandatory lending has so many advantages, like earlier about advantages of lending, microfinancing to SME too, and all that. Additional backup for the least developed sectors. That's another. Additional backup to least developed sector and least developed regions and some enterprises. I mean, so many things you can, build on your answer based on whatever he suggested. We hope that you have got it. You know what is mandated lending, what are those objectives. This is kind of, positive side. Then next time it could be, what is mandated lending? What is your critics on that? What do you mean by the moratorium? And what is the critics? Critically evaluate the moratorium proposition. That is the question that you may be asked to write next time, right? So you can have your own answer. So we'll anyway discuss when it closer to the exam, but just think on that line, right? What I just wanted to, by undertaking these questions is, now since that we have done some theory, now when you see the questions, it is not exactly in line with what we learn. So basically, examiner try to get some from the theory, and we are supposed to apply it on different areas. That's what is happening. That we know advantages of lending, but then they say if advantages of lending, economic perspective, advantages in social perspective. So then you need to think a bit. So for that, you have to do it right now. That's why I have given those all the structures and models. So you know that. Then you work on that. So let's say the next model for you is, right? Let's say you think about taking the moratorium, right? So you can develop another chart. So moratorium. So then definition of the moratorium, advantages, disadvantages, who are the stakeholders, right? So what could be the the concerns of the moratorium? What are the remedial of the moratorium? So like that, then you have your own chart. Just we put it like that. Could be correct, could be wrong. But then think whether you can find out some figures. You can refer whatever moratorium FAQs, frequently asked questions. I also have it. I will share it later. And like you go to a central bank or you go to some commercial bank website and see what their perspective of the moratorium. And also, time to time when you are talking to your customers, your friends in the bank, and then they also come up with pluses and minuses of the moratorium. Then you know write it down and have your own answer. By June, by July, what's when somebody say moratorium. So this is about well critical evaluation of the moratorium provision, because we haven't experienced this type of thing past, no. So this is about recent impact of whatever the past incident and the COVID-19 impact. So that's why the moratorium concept early it was there under reschedulement and restructure, but not to this extent. We talk about capital grace, interest grace, deferment of capital and interest, additional credit, right? When it is a equated monthly installment, one treatment, non-EMI, one treatment. I mean, different things being discussed. So you need to understand what are all those things. I mean, not easy. I mean, one thing is like yes, you can pass the exam by just going through another, but don't do it. Since we have time, try to learn it. Right? Learn it in a kind of a structure, kind of some answer plan we discuss. So what is like answer plan, what's a model. Then you have your own thing developed. Then you can add something, and then even you can convince one of your friends also, like this is the way that you need to also gather information and do your studies. Last one. What are the major concerns raised on mandated lending schemes? What is the course of action you propose for banks to address? So that's what Dilanje and Malaka mentioned. So basically, he has asked that as per the next part. Every bank, financial institution cannot adhere to the lending policy percentage for specified sale due to their market segment. So that's what basically tells HSBC. They may not be able to do it. Why? They're based on Colombo. They don't have a branch. And they don't have exposure to this segment, so they can't. But now central bank might say, no, you have to do like this. So then they have to come up with some kind of thing. So if not, you have to pay penalty. There may be chance that they can argue on different lines. Basically, they are international banks kind of thing. But local banks you can't. If you don't have a branch in Kadurwell, if you don't have a branch in Deniya or Kalpitia or to that effect, then you need to have a branch. You need to go there, because otherwise you can't do lending from Colombo to the rice millers in Kadurwell. So there may be some negative sides, limitations for the banks also when adhering to those. It's starting from cost to, people to, so many things. Qualified employees to handle particular specialized area are not enrolled at present. Even some of the banks even don't possess any division in their network to cater some, like HSBC agriculture example. Because now when you say agri, right, something, let's say you can't do the agri lending if you are not knowing anything about agri, right? So they may be agri graduates could be a very good solution as a management trainee to be recruited for banks. So then you can start and doing something on that. Setting up new business vision will damage the brand name and earn during the year. So because now originally you say your vision, mission, objectives are like this. Now the mandatory lending is coming about women empowerment, about entrepreneurships, to export, to agri, and so many things. But if you want to comply those things, so you need to change a bit of your vision also. But you are in some customers view, you are like a king. But with this, that you are coming to a different a person, like in customers' perception, shareholders' perception. But they don't want you to go to there, but they want what their margins, right? They prefer their dividend, because they want like the profits to be generated, and for their investment they want money in return, right? But whether you do agree, whether you do something else, it's not there, this thing. But again, but you need to change your vision and then only the mission and the objectives, because in order to achieve some of these things, so it may not be easy. And you need to balance so many stakeholders, not only your shareholders, government, regulatory authorities also you need to balance. So there you need to changes something. So may not be easy. Those are the problems, concerns that you may come across when you are attending, try to comply these type of objectives like mandatory mandated lending guidelines. Fine. So that's all about that question. I think hope it would find good with you, because I just actually wanted to discuss these things to again telling. So you have to change the thinking pattern right now. Earlier, yes, we have found some questions. It is in line with what we learned during the class, the presentation. But right now, the last 2-3 years, the trends we see is like more on application on what we learn. So that's why I am telling, not exactly you need to go through whatever we learn by heart, everything. So you can take something out of by model structures form, and then you develop your thinking, right? And then you can add more and more on that. So right now, so we have a couple of models developed. You also can add some concepts, and then you work on that. So moratorium is a nice thing too, you can work on. Start it today itself. By May, June, then we will see each of what you have done, right? And then we keep on adding on that. We discuss. So then we have a final moratorium concessions. It's good for us to future also. Whenever similar thing happen, we know what to do with those customers, how we do the moratorium. In banks, actually, we have done that. So how to system modification, customer information, training, right? So many things we have done because it's new for everybody, right? Even finance, even IT, even credit, business, all together has team, they worked on this. That's, I mean, when you also into that, just have a chat with your colleagues and say what exactly the moratorium means, how you have handled that, what are the advantages, what are the disadvantages, what are the the plus point for the customer, what are the negative for the customer, what exactly impacted on the bottom line, what could be the NPL the criteria, and those things that you can learn and gather, right? I'll share, but here that I am not because it has not been anywhere uploaded to your email. I will ask them to send it across next week. This is what actually I have discussed with my development financing revision. So we will anyway discuss with you in time to come. But before that, I will share it through email. This is basically what are the frequently asked questions on recent moratorium, and what are the additional credit line that we have granted. What kind of borrowers, specific industries, eligible credit facilities, restricted facilities, like that. Actually, what we have done is we have done a kind of a summary. So this is being distributed among our branch staff. So whenever customer comes, or whenever they want to identify a customer whether it's falling into moratorium or not, this has been useful. Now, for us is basically, he might ask kind of a question. Well, let's say, what is a moratorium turnover cut for SME as per the recent moratorium? So it's SME up to 1 billion turnover, because if we know that, we can get 2 marks sometime. This is very simple for us, but for examiner might test up on this. This is small type of area. So you also need to know this in not very detailed view, but in a sort of overview. You need to have it about why that if it is not part of the moratorium, what could have we done? Like there are personal loans, housing loans, and all that were facilitated differently because it is not covered under the moratorium. So like that, so you can when you read through, you can have so many things like moratorium is capital plus interest. Yes. So are they supposed to pay the interest on whatever the deferment? Yes. After 6 months, what's like interest rate? It was like 7%. The 7% kind of thing is important because they might ask those small MCQ question to that effect, and then they might ask what are the additional loan, right? Because we have are supposed to give additional loans to the customer to support their working capital requirement. The maximum ticket size is 25 million. 2 months working capital. What is the interest rate? 4%. Right? So those were part of the moratorium circular. So here actually we have summarized it. What about the non-performing treatment? Have we recognized the non-performing customers? So we have not and again they have a special provision where NPL policy. Now up to last March, if the customer having several facilities, if the one facility's exposure is more than 30% of the total exposure, and the particular credit is moving to NPL, then total customer was classified as NPL. But with this moratorium, it has been waived off. It has been removed. Now, if you have, say, leasing, if you have hire purchase, if you have term loan, if you have some other, say, whatever exposures, if any exposure exceeding 30 and falling NPL doesn't make the total customer NPL. So those are some of the, the information or maybe the directions given by the central banks under the moratorium. So these small pieces of things could be tested under MCQ sometimes, right? So NPL criteria, maybe additional credit facility amount, interest rate, or SME turnover cut, right? Because normally SME turnover cut is 750 million. So then we might sometimes, if the 750 say, we might underline that. We might forget this 1 billion cut. So like that, because very high level, good to know about this moratorium also for MCQ purposes. In addition, we can learn, because it's a 2-page one. I'll share it by next week or so. Just go through this and see whether that you have something to get out of this. Good anyway. It's a base document. Right? It's a source document. Start with this, and then you can work on further what we have just discussed about the overall moratorium structure of the moratorium model. Fine. Right. And we are moving to here, but before that, any questions? Any thoughts, views, feedback? Dilanja, Malaka, only 4 of you. To Hansani, Oshani. Any thoughts? You are okay with whatever the explanation? Is it all good with you? Or any further explanation needed? All good? Malaka, Dilanja, Oshani. Hope I think it's a bit of adequate. No gray areas. Okay, seems that we are a bit of less spoken today. I don't know why, but anyway, because I presume that things are okay. But please let me know that if you want kind of further input, or kind of you think otherwise, please let me know. Right. So then we move to the next part. That is again from the introduction to credit to a bit of credit related. Here they ask about 5 C's, and we are supposed to write a kind of short note on 5 C's. Now, I don't say this is kind of a difficult, but since that this has been tested, I won't make your attention. In future also they can give us this type of thing. So generally, in order to understand SME or retail or individual credit evaluation, we have been using this 5C model, or rather it's a 6C right now. First I'll explain 5C, and then I'll explain the 6C where exactly the change. Now when you say 5C, it's capacity, collateral, capital, condition, and character. So capacity is basically talk about customer ability, firm's ability to repay the particular debt, right? So once you obtain a kind of a loan, a credit facility, then you're supposed to pay it as agreed, as we just mentioned in the top on the one of the question. Agreement between the borrower and the lender is like you have to pay whatever dues with relevant interest and all that, and in the underlying, like whatever with the time period. Then you see whether you can pay or not will be your capacity. Then the collateral is basically what you are going to give as the additional comfort. the first way out in a kind of a credit is not the collateral. So that is basically it is the cash flow. Right? It's a cash flow that we are talking about. And then in case as a comfort, as a insurance, that you also get what? It's a collateral you are getting, right? So the collateral could be useful in case of emergency. One thing is could be the collateral could be a support in terms of customer to make more commitment, more obligation, right? So because those are something from the customer perspective towards the bank. And if in addition, if you are coming with the collateral as the borrower, so you have a better bargaining power with the bank also. In vice versa, the bank is asking for the collateral. It is good for them in case customer is going to default. In case customer is not going to pay, in terms of provisioning, it could be useful. So that's what basically. So capacity perspective and collateral perspective. Capital is basically it talks about the owner's investment. How much the customer, the owner has been invested in the business, right? So it basically tells about his representation, his commitment, his obligation towards the business. Because depending on the project, depending on the business, so we might demand capital, right? If it is existing business, we might not worry very much, because in existing business what happened is there may be adequate commitment, adequate net worth, adequate investment in forms of current or long-term assets in the business. But in terms of new business, it's like hotel, it's like factory, it's coming up new, then we see, right, existing you don't have anything, but it's a new, then you expect the borrower to entrepreneur to put more to show his commitment, right? Because then only we see, right, it's happening, and then they will contribute more towards the business. And then the fourth one, condition. A condition is basically, what are the external condition or internal condition could have an impact on the business, right? Let's say the customer running a boutique shop, running what do you call hotel, running a tea factory. So not only internal, there may be external factors also have an impact on this customer for their day-to-day operations. So that is also being looked into under this condition. So finally, the character is something, how much credit worthy the particular borrower is. Good for credit. How much suitable the particular entrepreneur is for credit. So that's all about referencing, crib reports, right? So many things that we may look into that. So those are the, like in very brief, the 5 C's that we have been spoken of. And remember, so time to time the examiner would, in MCQ, he might ask about, right, 2 or 3 C's in 5 C's in evaluation of credit, or maybe underline something, or in the second part he might say just list the 5 C's or write a brief note on each C. So that's what the maximum that we can expect from the examiner for this type of a question, these areas as well. Now recently we are speaking about 6 C's. So what is this 6 C's? The 6 C's is there's no change from collateral, capital, condition and character. The capacity, you are going to change it. The capacity has 2. That capacity can be in 2 forms. One is capacity as it is, the other one is cash flow. So how we are going to differ this capacity and cash flow? The difference between, in capacity, you say the firms or entrepreneurs capability to run the organization or run the business. What do you mean by that? There is a qualitative aspects of the promoter. So his management capacity, his marketing capacity, his organizational capacity, operational capacity, legal capacity. Basically, whether he has those things within him to run this business. Let's say the legal age, his experience, his knowledge, his management expertise, right? His relationship with peers, all are qualitative. So you check that capacity. Then come to the cash flow that is quantitative part. Pure cash available to service the debt. That is basically we talk about debt service cover ratio, debt equity, interest cover ratio, cash flow. cash inflow, outflow, surplus. So everything will be quantitative basis. That is the cash flow. So now earlier version capacity includes this both. It is ability to firm to repay the debt kiwahama, both is there. The capacity to run, capacity to operate the business together with repayment capacity. In new version, capacity itself will say ability to run, operate, manage the business. That is a qualitative aspect. And quantitative is basically real cash flow you are talking about. That is a cash flow statement in terms, in other terms. I hope you have got that. So when it is 6 C's, yes, you have capacity, cash flow, collateral, capital, condition, character. When it's 5 C's, it's capacity, collateral, capital, condition, character. Right. Any questions? Any questions? Are you okay with that? Because you might get both questions, both type of questions. I have seen some papers it mentions 6 C's, some it is 5 C's. Now you need to know what's the difference of 5 C's and 6 C's. Done? Okay. Fine. Then next part is explain what are the categories of lending. The first slide that we even discussed today and last week also, that is security base and the or the collateral base and about cash flow base. I think we don't have much explanation on that. That's what we have to tell about what is security based lending, what are the basic features, some advantages, and kind of example. So that's fine because you need to write at least 103, 203 lines for each security and cash flows. I think since we have done it a couple of times, I'm not going to explain further. Then this is again a third one, which is, as I was telling you, so sometimes the examiner would ask us to write a short note on product. So again, since we have done a kind of model, you can use that model. But here the examiner has given it in more essay type of way, but don't, try to write essay type of answer, because always write 1, 2, 3, 4 features. That is much appreciated because you can write essay types, but the thing is, depending on the examiner, so you might lose some marks because now examiner was asked to correct your marks on 0.4 marks based. So if you have not written on that way, then examiner should go into detail and check whether there are 4 points or 5 points inside that. If he could not find that, probably he missed 1 or 2, then we end up with 2 marks or 3 marks instead of 5 marks. Right? So then that's what basically, see, when you are going through this, you have adequate lines, but sometimes he might not, take a kind of effort to extract it and write in a point form. So, I mean, start it right now. I mean, take whatever the product and you do it point form, and then you know that you can produce even at the exam. To support that, you can have the model develop like definition, features, advantages, disadvantages, risk and mitigants, and illustration or like example. So maybe you can add 1 or 2. Who are the stakeholders of this product? What the like in general purpose of this product? So you can write it. Maybe 6 or 7 circles you have it. Then have each for whatever each product, whatever each circle fill. Then you are in a position to write a kind of very good short note where you can get maximum marks for that. We'll just read through. In development lending, this product is very useful as a working capital financing where pledge of goods could be taken as security for the facility, thereby giving lesser burden to the promoter in offering security for total project financing. This also allows the promoter to stock seasonal raw materials, finished goods to have better margin in using different periods by settling part by part of the facility and taking maximum utilization of the material stock pledge. So I think very much fine answer, but the missing part could be something about advantage, could be a risk that you can mention here, and then also you can give an example like a paddy miller or the like cultivator farmer uses and have your own stores and use it for stocking. It could be a real life example. So like that, you can add here something. Advantage is something because other than further security, you can use the stock as the pledge. Stock as security is advantage, right? Because if you don't have a security, the bank would not lend you. But in this example, because the whatever you are going to purchase could make a security, so it's a very good advantage, right? Maybe the risk could be something, since that you are very much dependent on the stock. There may be filterage, there may be sort of loss of stocks kind of thing. Then your security could be impacted. That's a risk. They are basically, due to this operational risk, there may be credit risk would follow. So there are the kind of a risk that you can mention. So like that, think something, and then have your answer develop. I think you can do it. I just shared my thoughts, because now the answer, yes, it's not 100% complete, 60% complete. See whether what are the 40% you can bring, and you can see about who the stakeholder. Generally it's a working capital type of requirement, and maybe it's to be used for the financing of stocks, and examples like paddy and maybe vehicle, like so. Then you have better explanation to this answer. Even examiner knows that you know what a practical situation of this, application of this. So he might give full marks because the other students might not have written it, but you have written it. Right. OD, a product for working capital financing without having a constant repayment amount payable as installment, will help the promoters to finance fluctuating working capital requirement of the project. This product also helps the promoter repay, settle entire advance at once when the sales proceeds realized by them, rather than making regular payment as installment. Again, half completed the answer. So you can add something about the type of overdrafts: POD, TOD, casual loading. And you can say what is POD, what is casual TOD, casual loading, what is TOD. It's a one line. And also you can mention advantages of the overdraft. So it could be something anytime you can settle. So your charges will be whatever what you have paid, for that you need to pay. And then no hassle in like operation of the facility. Once you have granted, only after 1 year only that you are need to be worried. Like, so there are some advantages for both parties. What are the risks here? As I just mentioned at the outset, it could be about end user funds cannot be controlled. Right, then there may be credit risk, or maybe when it is demanded at the end of a period, then the customer does not have adequate cash flow to service it as once, because it's demanded at a given point of time, right? And then what are the precautions? What are the mitigations you can do? The mitigation could be something, you can have cash flow, regular cash flows to your account. You can get own checks. You can get post-dated checks. You can have sinking fund, cash build-up, and so much you can add like that. So with that, I think you have a very good answer, right? Hope I think you have got, but basically I am sharing with you. So not limited to these two products. So you can think about 10 to 12 projects about project lending, microfinancing, syndication, leasing, right, term loans. When you see some past papers, so they have we can see there are a couple of products being continuously tested, about 10 to 12 products. So then you also go through those things and get ready with a very good answer based on whatever the model that you are going to develop, right? So that's what basically my advice is. So then with that, you are in a kind of a good position. Whatever comes in your way, you are at least 70-80% ready at the exam point of time. Then maybe 30% you can add during the exam. So based on what examiner is asking for. Why I am telling is, so sometimes the examiner would tell you write a short note on each product in terms of, in the context of development financing. Then you need to think about a little bit different, and think about in development financing how this is useful. Nothing like here also it's a development lending. This product is very useful. Why? Development lending, we have capex, we have working capital requirement. So in development lending, working capital requirement, so we need short-term working capital type of product. This is one of those things in development financing basically. So we are very much worried about our focus is cash flows than the security. Right? In this case, like offering a pledge kind of the working capital, so we exactly match with their cash flow requirement. Whenever you are going to dispose your pledge stock, so you get the money in terms to settle that day. That is in line with development financing principles. In that way, so you can, redraft your answer, what you know. එතකොට මම ඒක කියන්නේ ඒ වෙලාවට අපි බලලා exam එක මොකක්ද අපෙන් අහන්නේ, for that you need to write a kind of answer. I mean, don't very much worry right now because we are just start the course, so you have adequate time to be in line, go through the answers, prepare your answers, not like the development finance revision students. So no worries, but I just want to focus your thinking. I do know exactly when it comes, that's what I have to do it. From the scratch, they develop your skills to that direction. So then we are very much fine when it comes to the exam time. Fine. Okay, any questions? Any thoughts? Since only I am talking, any questions, any feedback? Are you okay with the questions, answers? Are you happy with the the way that we construct answers? Yes, no? Dilanja, Oshani, Malaka, yes, thank you. What about the rest? Thanks, Dilanja. Right. Then there is another question which is not exactly into what we have learned. So that is basically on the working capital computation. So we will take that question once we undertake the working capital module in 2 or 3 weeks time. So for the time being, I am not trying that question with you. Please remind me whenever when we are undertaking next further questions. This is basically not difficult, but since we haven't done the theory, so we will skip this for the moment and we'll take this up once we are planning to do working capital question after the working capital module, right? Then we will move to some more questions that is on microfinancing. Sorry. Right. That is again a microfinancing question, because there are a couple of questions. We'll try to do one or two. Sorry. We have done that. The rest we have done it. And the first question is of this we'll do, and then we'll based on that we'll move to next. Microfinancing is the main delivery method of development financing in many developing countries through financial inclusion and financial literacy. There are many global organizations are available to provide funding for microfinancing developing countries. That's like general explanation. Part 1. So briefly explain the key objective of microfinancing and target group. So this is the type of questions we generally get for microfinancing type of area, right? So it means as I was telling you, it's not a difficult area. Sometimes that I advise you to start microfinancing or SME as your first question, because when you see the last past papers, you can see it is not difficult if you do your homework properly, because not like mathematical questions, these areas they just to reproduce what you learn in a more presentable way. So I think you can do that once you do a couple of questions. You are not in a position, you are in a position to answer what exactly the examiner is asking, right? So this part is explain the key objective of microfinance target group. Now, to answer this, the first one is said to provide the poor with much needed capital to start their small scale enterprises, elevation poverty, and make them participate for the country's economic growth. That's fine. But if you remember, in our definition, we spoke about 4 things: sustainable empowerment and women entrepreneurships and all that. So like those things you need to include here in addition what is mentioned here. One thing is we talk about empowerment women, one, and we talk about financial literacy, and we talk about standard of living, and we talk about provisioning of whatever capital. There are 3 or 4 items we discuss under the definition of the microfinancing in our slide. So be prepared with that and have your ready-made answer for this type of a question, because here even objective for examiner's perspective, he has not given all necessary here, right? Then for you, because it could be asked anytime, so you can refer that and memorize it and you can write it. That's one. Target group, unbankable, poor and low income household, and their micro, so that's fine, because in a pyramid, the people who are below the poverty line, or you can say unbankable, low income household, and micro enterprises. So entrepreneurs and enterprises, they are low income, unbankable, they are below the poverty line or poor. There are 3 points that he discussed. So you need to have those 3 points intact while you are writing the answer. Fine. Okay. Then they ask about financial inclusion. This is again a kind of a definitions, but when you are reading the definition, there are 4 areas that you need to include. What are those? Financial inclusion is the process of ensuring access to appropriate financial products and services needed by vulnerable groups such as weaker section and low income groups, affordable costing and fair and transparent manner by mainstream financial institutions. There are 4 key items in this definition. එතකොට දැන් ඒ 4 කෙටි ප්‍රශ්නකට ආවත් දිග ප්‍රශ්නකට ආවත් ඔයගොල්ලෝ හරියටම මේ 4 හොයාගෙන මේ 4න් ඔයා ආන්සර් එකක් හදා ගන්න පුළුවන්. But no need to memorize this definition. See what are those 4 key areas. First one is appropriate financial products and services. That is one. So because financial inclusion is something to provision of what? Appropriate one. Financial products and services. That's number 1. Then who are the beneficiaries? ඒක තමයි part 2. Vulnerable groups like poor, low income or whatever. So the number 2 is target market. What is the product, what, and who? 2. Third one, how? Affordable cost, transparent manner. Affordable, transparent. That's a point 3. How? By whom? Mainstream financial institution. There we talk about 4. What, who, how, by whom. Those are 4 critical points in this financial inclusion. But I have seen this being tested in MCQs also. So thereafter he has taken it for MCQ and write a 1 line or 2 line like financial inclusion for 2 marks. And part 2, it has been given for 5 marks. But if we know these 4, then wherever it comes, you are ready with the answer. So memorize it in that way, because no harm if you memorize these things, because these things cannot be changed. Financial inclusion, microfinancing definition, microfinancing objective, microfinancing target group, even in our structure, I mean, it was in similar manner. So take some time and do a kind of memorizing, because it could be useful where that you can get maximum marks, because you can't go wrong anywhere, right? Because it's like standard SME definition, SME sort of thing. So importance of microfinancing, importance of credit, importance of project lending. So I mean, those things you can add 1 or 2 values, I mean 1 or 2 points, but generally it's like done, right? අප එතෙන්ට ගියා කියලා ලොකුවට වෙනස් වෙන question එකක්වත් answer එකක්වත් නෙවෙයි, right? Okay. Third, how microfinance differ from conventional bank? That's another good question, yeah, because generally we have traditional financial institutions who offer like SME, corporate, transaction, and that type of banking, and also we have microfinancing institutions like international NGOs, local NGOs, cooperative societies, and all that. So we have a lot of things in general, right? So we try to compare, contrast. So how it differ? So assess entrepreneur skills of the poor. So in generally in microfinancing, they are assessing the skill, capacity
capability. That's why we talk about team working, grouping, so financial literacy and saving habit and leadership and all that. So because we need to assess it, because based on that only, that is repayment is survival is there, because they don't have adequate security. That if they are is not good at entrepreneurial skills, they can't enhance their business to next level. Not like SME, because SME is bit different, versatile. They have learned something, and so they can manage situations, but not these people. Number two, in microfinancing, you provide basic financial literacy, right? Not like SME. You need to do how to bookkeeping, how to do a bit of marketing and like saving and about financial statement management. So about some basic tips on financial literacy. Third one, you give small loans and targeted people, and then you introduce savings to the organization. That's what even our first model discuss about that. So small loans, and then it goes to next level, and then you go to the bigger ticket size, and then you, with that grooming of the entrepreneur with the kind of skills, you go to the next level. Higher interest rates compared to general lending rate, right? General lending maybe 10% to 15, whereas as the microfinancing, it's something about 30, 40, 50%. Then the structure of the organization also, like small institutions like cooperative, society based, non-profit organizations. So like not like very formal organizations are there being the structure, right? Maybe 3 people, maybe whatever, maybe compared to banks, you don't have policy, whatever mission kind of thing, and not the very formal structured organization. So these been offered by not very formalized organization, so in a more informal way. So that's a kind of issue later. You can find that whenever you are going to do that. But generally, these are something that how the microfinancing institutions are going to differ from the conventional banks. Right. Last one, why is it necessary for microfinancing institutions to provide financial literacy? So that's again we talk about financial inclusion and all that, because now not like SME, not like corporate, this is a must. This is a real need, right? As I was telling, microfinancing is micro. We define who the customer, who the objective. What are the objectives? When come to financing, we talk about products. That's provision of financial products. Number two, non-financial services. Remember, so that is very much critical, because without that you can't sustain. You can't make them their life standard. You can't empower, right? Remember, there are some objectives. You can achieve objectives if you are not going to do this non-financial support, financial literacy. So that is basically the understanding is step for clients towards financial inclusion. Remember, financial inclusion, there are 4 parts. One of these is basically by doing so, they can move financial inclusive, like SMEs, like corporate. Move away SME sector from money lenders. Because when you are doing this, then they know what's the difference between money lender to formal organization to non-formal organization to like very formal organization. They know the difference. How are you going to deal that? Right? Why that? Why they have to go to the money lenders? Because they may be fear going to the banks, because they don't know how, business ethics and all that. But if you have been trained, then you know how to, yeah, how to meet people, how to discuss. So everything could be trained, imparted that knowledge. So then they are complete to sell their product easily, rather than going intermediaries, rather than going to third parties. Now they can do it their own. That they might tap through internet, they tap through e-commerce, they tap to dealers outside their region, because they have been given that knowledge. Healthy deposit and loan portfolio, the savings and the loans, they can manage it, because quality loans, right? Quality portfolio, because they know the value of repayments, right? They now know that when they are into NPL, how difficult they can go and get the kind of facilities to reduce the NPA levels. to reduce the NPA levels. That's also very important. Then fourth one, use technology to minimize admin cost for microfinancing institutions, because now since that when you when you train these people, right, so then they are may not be techno savvy early stage, but later on, when you train them, they how to use smartphones, smart cards, about ATMs and other GPS sort of thing, internet banking, e-commerce, and now they are ready with that. Then what happened? Then microfinancing institutions, based on somewhere, they can deal with. So rather than in person come in and doing, now they can do. And they, let's say example, now they produce something, now they can deposit wherever they are, and they can withdraw with the smart cards rather than cash. They can transit to like a big organization, so that your loan being automatically deducted, savings to standing instruction. So you need not to follow it now manually. Instead, you have these things in hand, because as per the support with the technology. So in that way, you can manage a lot of cost, transaction cost. So by way, you can reduce even the interest cost as well. So this is a kind of very, simple questions we are getting from microfinancing. But most of these questions are in this nature. So you can refer some more questions also, but not difficult. As I was telling, they're testing mainly on the theory presentation we learn, right? So not like SME, because these things like so far we haven't seen something. Very coming outside in a very aggressive way. More or less, it's there in the paper, it's there in the past papers, it's in the theory that we learned. So that's my advice is, like, if you are like answering a microfinancing question in a paper, you can select it as your first question also, because it's not difficult, right? So with that, I think that part is all, because we have started doing the rest today morning. That's it. I think in this question we have done the first part the other day. Yeah, this OD leasing, this is what generally you have to read through, and basically this is what generally he has asked it. Since we have a bit time, I will just run through this question, because this is more or less again something the application of the particular question. Here, development of export sector has been regarded as a major need for assisting the country's development, although export sector has not come up to the stage so required. So economy for export promotion, and how you propose banks to assist those sectors in addition to existing bank credit facilities. So they ask about tea industry, fisheries industry, and then tourism, agro, right? Because I just wanted to take through, this is basically, even right now, tourism, agro, tea are very critical even to date, right? Then sometimes we might have the same type of questions being repeated in time to come also. I'll just explain one, and then you can follow the same for other also. Here basically, now this question again coming from theory, out of the theory, because it's application. So that's why I sometimes I insisted you at the outset of our course, try to see some paper articles related to SME, industry, central bank changes, right? What's happening in the budget. So if you know those things, this type of question be easily answered, because what is happening in the tea industry, what is happening in the construction industry, what's happening in the tourism industry, like that. Here, because you need to write something about importance, right? So you need to know something bit of tea industry happening right now, right? Sri Lanka, renowned for its high quality, second biggest tea production globally, one of the world's leading exporters with a share of around 23% of the global demand. Tea production, one of the main sources of foreign exchange, and employs directly or indirectly over 1 million people. Promoting tea industry is important. So why tea is important? One thing is it's the second biggest exporter and the second biggest income, and 1 million jobs. and because we are catering the 20, we have market share is 23%, and it's geographically it's like located, and it's part of our agri initiative. So those are the importance of the the tea industry to Sri Lanka in large. Then the bank assistance is provide financial assistance to meet capex, startup project, and funding working capital needs to sustain ongoing projects. So generally, bank would assist them both capital needs and the working capital needs. Very simple. Invest in customer focused R&D with the aim to offer novel financial products and services that meet the change in demands of the rapidly evolving tea industry and value addition. So that's the next step, because yes, we do capex and we do this, and then we have to come up with something R&D about, say, about tea value added products to export market. That's one. Or we might have to find an R&D, some kind of the brands species at the ground level to get more harvest, or whether we can do something value added process. That we might have to think about, some Kenya or India, how they are going to do that. Whether by doing that, so we can increase the output, one, increase the quality. Like even tea also, we have different categories, right? There are high demanded tea also. So what are the areas that we can grow? I mean, those things also could be part of banks initiatives. Not every time the sponsor, the entrepreneur can do. Banks and the tea ministry can go together and do those initiatives. Invest in customer, right? Set up a regional SME center to provide better accessibility for entrepreneurs within the industry to benefit from a range of financial and advisory. So that's a SME center approach, where what we can do, because now we know SME centers are being operated. Through SME centers, we might advise them about market, about process, about finding buyers, new technology, right? About e-commerce, e-marketing. So like that. So here, basically, banks system is coming from. Now, just to put it more in a structured way, when you have this type of a question, how are you going to answer that? Now, as a face of it, imports, yes, you need to think about garment, you need to about tourism. We need some macro data. Yes, obviously, you need to be trained on that. That's part one. Part two, banks, anyway, what we are going to do, we provide financial and non-financial services to these customers. One of the financial services, one of the non-financial services. And by doing that, what we can do, that's what the additional point, R&D, value addition, process improvement, right? Training kind of thing. Non-financial. If you are thinking in that way, this is not different. What are the products? It's capex, working capital. If you want, you can explain something capex about factory, machinery, those things. Working capital, it could be about data financing, it could be about working capital type of financing like stock financing. A level we can go, and then R&D on process, R&D on product, and the training on like employees and all that, those things. And about marketing, what we can do. So we can interact with brokers, to the smallholders, to the factory owners, to government, like, so we can make that forum and make a a better position. So that's what the bank assistance is. You need not to do a kind of going through and memorizing all those things. No, you need not to do that. It's all about how you frame it. Structure. Structure is structure the fisheries. What are the products? What are the services? What are the value addition? What are the process? What are the regulatory support we can do? Even tourism right now. Right? So that way, I know this is not like very easy question. Right? This is not easy question even. It's an average question. And maybe question, let's say, when it comes to you, if you don't have any alternative, you can try this out. If you are tricky that you don't have any other to write as a fifth question, so you might attempt this. Because why I'm telling this, because if you are very good at reading, getting information done and all that, yes, definitely you can get maximum marks here. Make it right or wrong, while you can get it marks. If you don't have that bit of idea, then you might not have better data information to write the answer. If you are not 100% comfortable, don't write it. When you are writing whatever all other four, and then you are look for other which is much comfortable, then take it as last question and start it at writing. So then you can get it, because here no ready answer, this is right or this is wrong. And you can add something about thinking in a macro level about the product and services. What are the product capex and these services, like value addition to process to product, and all that, what as organizations do and other organization can do. That's what all about. So with that, so we can have a better answer ready. Again, fourth, it's not difficult, microfinancing. So that's so we can even do it at a later stage also. But I just wanted to share a couple of questions, because I think now, since we have done 4 now you have a fair knowledge of how the questions has been asked, right? How the answers suggest the answers there, what value additions that you can do. So my advice is, don't delay. So take these questions from 20 whatever, if you have past papers. I think I have shared in the group all the past papers from 2014 to 2019, all 12 papers I think I have shared. So if you have time, then select from 2014 to 2019 what are the SME questions, what are the microfinancing questions, what are the introduction to credit, introduction to project lending, introduction to lending questions, and select all those things. First read question answer, then you select whatever your models and see whether what are the additional things you need to done on the particular whatever 6 or 7 models that you can develop, and then have answers ready, written, comfortable. When exam comes, just you refer that models, structures. So with that, I think 200% you are confident and you are ready for the exam. Don't wait for the last moment. Even right now you start. I think I have told you to gather whatever the information which you feel important and relevant to not only exam but generally in lending, SME, micro, project lending, right? So even the recent things happening in the tourism sector, important. Moratorium, it is important. That's what I can share with you. Right? Any questions? Malaka, okay. Oshani, okay. Dilanja, how about you? Thanks, Malaka. And Oshani, I presume you're okay, and Dilanja as well. Yeah, my number. I will just put my text or WhatsApp, so I'll add you one of our groups. Then I will share. Anyway, I will share. I think Dilanj, you haven't got the past papers, right? I think Malaka and Oshani, I think you are in my group and probably you have got that. Malaka, then you also send me a WhatsApp message, so then I'll add you and I'll separately send whatever the development past papers, right? So that you can get it downloaded and do it. Oshani, yeah, I know you are with that group sometime back, right? Fine with that, and then so let's meet next week. So next week our plan is like we start with break-even analysis. So bit of mathematical area, but we'll take time and we'll do it like what we have done the first 4 areas also. Don't worry that so I'm sure that though we are in these numbers like a group class, so we'll do a maximum, and then we'll get that across also through about then working capital, financial statement analysis, ratio analysis, break even, and investment tools. There are some mathematical or quantitative area, but let's see so how far how best that we can do. So then again, thank you very much for being with me, and let's meet next week, and wish you a very happy and safe weekend ahead. Okay, thanks.